If you're a first timer here, or I'll remind you who I am John Darcy. I am the managing director of SALT, but also director of business development here at SkyBridge, which is a global alternative investment firm with over $7 billion in assets, including over $1 billion in crypto assets, which is something that we are coming up on sort of the 1-year milestone of our involvement in the crypto digital asset space. I'm joined today by only one co-host or guest, and that is Brett Messing, who is SkyBridge's co-CIO now, as well as being president and COO. And Brett is really the one that sort of spearheaded our involvement in the crypto space and spearheaded our purchase of Bitcoin in our flagship funds. About 1 year ago today is when that really started to come to fruition. We're here in about mid-November. We had done our due diligence or research on the crypto space in 2017, like a lot of people did, but didn't pull the trigger in terms of any direct involvement. But then when Brett came to SkyBridge, he made a decision along with our other members of our investment team that we had to be involved in the space. And so we made that decision and made that investment starting in November of 2020 when Bitcoin was below 20,000 per coin. And today, here we are with Bitcoin at or near all-time highs after a nice rally the last couple of weeks. So I want to start it there, but I also want to remind you that this is supposed to be interactive. So we've already seen some messages come into the chat. We also have the Q&A box at the bottom of your video screen. If you have any questions for Brett or myself, please submit them there. And once we get through our sort of prepared set of questions and commentary, we will dive into those questions. And if you have any further questions after the episode, you can email us at bitcoinir@skybridge.com. Again, that's bitcoinir@skybridge.com. That's enough talking from me, though. Brett, the question I want to ask you is in reference to what I was just talking about, which is almost 1 year ago around this time of year, you, along with our investment team, made a decision that we wanted to be directly invested into Bitcoin. What was the process of coming to that decision? At the time, it wasn't a mainstream, traditional investment manager type of decision, but we decided to make that leap. What was that thought process like, and has it played out the way you expected it to?
It's interesting. Well, when we bought Bitcoin, Bitcoin's market cap was 300 billion, and the whole market cap of the cryptocurrency market was 400 billion. Today, the cryptocurrency market cap is 3 trillion. So no, we didn't see that coming. There was definitely luck to the timing, and things have, as they do in the world, accelerated far faster than we would have expected. And I think, as you point out, when we made the decision, it was sort of somewhat offbeat, a little idiosyncratic. Bitcoin and crypto was an asset class that could be ignored by institutions. That is no longer the case, right? At 3 trillion, you're starting to become a righteous asset class. And then as it gets bigger, it becomes one where you have to own it. And I mean, I can tell you, I mentioned this last week, my daughter's working at Coinbase, and actually they reported earnings yesterday. They're just hiring and they're onboarding tons and tons of, every hedge fund's getting the pipe set up. And just what's something for people to watch for. It's been a good year in markets for everybody. Hedge funds aren't going to buy Bitcoin and crypto in December. They're going to wait till they get their incentive fees. Because as we all know, we do get these jarring declines in crypto, but January is when you put risk on, right? Because if you have a bad January, you got 11 months to take it to make it back. And I think you're going to see a lot of capital sort of coming in. But I would just give, and answer your question, we have been following Bitcoin for several years, and Fidelity becoming an institutional custodian in December of 2019 enabled us to start taking a much different kind of look at it, because we really just couldn't buy it until there was, an institutional custodian solution. And then Paul Tudor Jones announcing on CNBC in May of 2020 that he bought it. I think that gave us enough air cover. And so I think that was, it was a multi-year process triggered really by those two events.
And when we put that position on, and even over the last year, we've gotten a lot of inquiries from existing clients or prospective clients that are still uncomfortable with crypto and digital asset type exposures. Now, as you mentioned, with crypto at a $3 trillion market cap, with a Bitcoin futures ETF in the marketplace, with several more public companies that are involved in crypto, as well as ETFs that sort of track the crypto ecosystem. Do you think we're at a little bit of an inflection point in terms of the widespread institutional comfort level with owning Bitcoin and crypto?
No, definitely. I just think the way people interact with us, look, Bitcoin could have been banned 5 years ago. That's not going to happen now, right? It's owned by public companies. Coinbase announced they have 73 individual investor clients. Those are voters. Endowments own it. Insurance companies own it. It's not going to be banned. So that regulatory risk is gone. The Chinese mining ban, which brought the miners to the U.S. U.S. is now the global center of miners, removes a very sort of major risk. I think a lot of institutions are still trying to figure out how to deal with the volatility and how do they put it in their portfolio. But no, I do think, as we were talking before we went on, I think the ETF was very important from a psychology standpoint, in that it's the U.S. government saying this is an asset class, right? And I think people are more receptive to it. You're seeing a lot of people, instead of buying Bitcoin, they're buying Bitcoin equities. They'll buy the Bitcoin miners have been on a tear. Coinbase is a good proxy, MicroStrategy, but you're seeing more and more people, either integrate it or seriously consider it in portfolios. So I think there's been a sea change. And, a lot of people say, well, have I missed it? I think it's more attractive here at 66,000 than it was when we bought it. It was a lot more risk when we bought it. We can go through all the list of events that have happened in the year, and the validation it's gotten from people like Stan Druckenmiller and Dan Loeb and Ray Dalio and on and on and on. So, yes, I think there's been just a complete and total sea change.
Yeah, and because crypto, or we'll talk about Bitcoin in this instant, doesn't necessarily have any quote unquote fundamental value. I mean, it's not tied to the cash flows of an underlying company. Really, the price action is driven by sentiment. And it feels like, sentiment is obviously very one-sided right now, given what we talked about, the launch of the Bitcoin ETF, more true investment institutions putting on their balance sheet. What are the types of things right now that you think could flip sentiment? The last time sentiment flipped, it was Elon Musk coming out and saying that Tesla was no longer going to accept Bitcoin, that he had concerns about the environmental impact of Bitcoin. And so that triggered a shift in sentiment that caused the liquidation of, I think, some levered long positions. And that's all been cleaned out. Do you think there's anything right now that could flip sentiment back, in a more bearish direction?
I think that the most obvious one is just a pullback in price. You know what I mean? It's like, because there isn't this, earnings basis for valuing it, where you say, if it gets to a PE of 15, I'm in, right? Or value buyers will come in. And it has these violent moves. And, so when it's going up, people have FOMO, they feel like they have to get in. And when it starts declining, people are like, no way. So I think just the volatility actually shifts sentiment. There's nothing really on the horizon that I'm that worried about. Look, I think it's likely Van Act, there are a bunch of people, I think 20 people have filed for spot Bitcoin ETFs, us included. The SEC has deferred making decisions on any of them. Next Friday, they have to make a decision on Van X. So they're out of they've played all their delay cards. The market absolutely expects them to deny the Van Act one, that they approve the futures one, but they will deny a spot one. But the market might not take it, they'll issue a statement. Maybe the SEC says something that gets people. So that's something I'd look for. I also could see that being a positive. I think there could be a way they deny it, but it's positive. And I'll tell you the way that is. There are two issues that have prevented the SEC from approving a Bitcoin ETF. One is market manipulation issues. How do you price the ETF? And that at this point, given we have a futures ETF, is a really bad argument, because you have, and I'm not going to bore the audience, but the same mechanism for pricing the futures ETF will occur in the spot. The second issue is custody. And the SEC, I think, could rightly say there's no custodians that we think satisfy 1940 Act requirements. Now, look, as an investor in Bitcoin, institutional investor, we are very comfortable with Coinbase and NYDIG and Fidelity, but they're not Mellon and they're not State Street Bank. And so if the SEC were to deny it, but say it's all about custody, here's why that's positive. In the first quarter of next year, BNY is going to roll out, so the largest custodian of assets in the world, or in the United States, with 40 trillion plus in assets, is going to roll out Bitcoin custody with their partners Fireblocks. At that point, you will have solved the SEC's objection. So their denial would be a short-term one, and then I think we would very confidently believe that you'll get a spot ETF next year. So, and then just the last thing I'll say is, Wences Suarez said this at our SALT conference, the biggest risk is just the unknown, right? The unknown unknowns. It always is. Right. So, but those would be the two that I would cite.
Yeah, and as you referenced, Bitcoin is not going to be banned. Gary Gensler has even come out and basically said as much. I think there was some uncertainty around the way he was going to approach digital assets. He basically said Bitcoin is not going to be banned, but there could be potentially some crypto assets that are deemed securities and do fall under some type of deeper regulation or ban type scenarios. Do you expect that type of scenario to play out in crypto, where you have some of these blue chip assets that have become too big and have proven themselves, that won't fall under further regulatory crackdown, while others will fall to the wayside?
Yes. The short answer is yes. When Gensler was asked specifically if Ethereum was a security or not, and he wouldn't answer it, and the conclusion that people drew was that he was messaging that he thinks Ethereum is a security. So I think there are going to be enforcement actions. The issue is sort of with whom, who do you go after? I think that's why he's focused on regulating the exchanges. And this is where the SEC is just in a box, and where innovation and regulation are going to have to find a harmonious place to meet. Gary Gensler has said to Coinbase, we want you to register as an exchange. And what I'd like to hear Brian Armstrong say, sure, just send over the documents. Like, there's no way for them to exchange. They don't fit into the traditional box to register, right, as an equity exchange. So Gensler's asked for legislative authority. This Congress is going to do nothing. So I really don't know what's going to happen on this. But I do think that part of the reason why I am so heavily overweighted Bitcoin, and I think it's likely over the next 6 months that Ethereum outperforms Bitcoin and maybe Solana, is Bitcoin has just been de-risked. You don't have these kind of issues, right? Solana went down in September. Ethereum's got a transition going on. There's competition. Bitcoin is in its lane. It's got no regulatory risk. I just think it's become a completely different animal. I'm sounding like Michael Saylor as I sit here talking, but I do think he's right. I think the level of risk in Bitcoin versus everything else is it's a substantially different risk profile.
We had a question in the chat about Ethereum 2.0. So that's an update that's coming out to Ethereum that's going to reduce gas fees. There's been a lot of agita around gas fees and transaction fees with Ethereum. Do you think that Ethereum is going to continue to eat into, market share of the crypto market and take away some of Bitcoin's market share?
It wouldn't surprise me. There are Bitcoiners who the idea of Ethereum having the same market cap or a larger market cap freaks them out. I can sort of care less, right? I'm focused on, Bitcoin going up, and if Ethereum goes up more, well, that's okay. I'm not necessarily troubled by that. Again, I think it's sort of a different. I think its addressable market is a larger market, right? It is really trying to be Web 3.0, right? Which is different than Bitcoin, which is sort of a digital gold monetary asset. So it definitely could become bigger, but again, as I said, there's just a lot more risk in the transition, risk in the competitors. What Stan Druckenmiller said is, there could be two people at Stanford right now coming up with the next, smart contract layer 1 protocol that's going to wipe all the ones that exist out today, and that will not happen with Bitcoin.
Yeah, and we have to give a shout out to our friends at Galaxy. Just produced a really nice research report called Creatively Ready Layer One, talking about the Layer One protocol wars. And Solana has a lot of momentum, as you mentioned. They're just coming off their Breakpoint conference in Lisbon, where several large investments and ecosystem funds were announced there, including one by Alexis Ohanian, the co-founder of Reddit. So yeah, there's certainly sweepstakes going on in the Layer One protocol world. I want to go to another question from the chat, which I think is a really good question. We talked about Peter Thiel and his comments around Bitcoin a few months ago. He was on a podcast and he basically said at that time, I think Bitcoin was probably more in the 40,000 range. He said, this is the most obvious trade that I've ever seen. You know, I think people that have had anxiety or have criticized the Federal Reserve and the US government for running high deficits and stoking inflation, before Bitcoin, they didn't really have a trade to make. They could, talk about shorting markets, but that didn't really make a lot of sense given the inflationary nature of Federal Reserve policy. But more recently, he had some interesting comments that while he feels underinvested in Bitcoin, like a lot of people probably do, I know we've talked about this before, he also said that he feels like the secret might be out with Bitcoin and maybe some of the upside isn't quite as attractive as it used to be when Bitcoin was more of a secret and it was more hated. Do you feel like I was asking about sentiment earlier? Do you feel like it could become something that it gets to be an overcrowded trade at some point now that people are starting to buy in a little bit more to the thesis?
No, I think Peter's wrong. And I would encourage everyone on the call to do this exercise. It is still the case that the boomer generation has most of the wealth in the United States, right? We've got these young folks on Robinhood and meme stocks, but the real money is owned by older people, 50 to 75. Ask people in that cohort, when you see them, do you own Bitcoin? I think you will find maybe 1 in 10. But then you have to ask a follow-up question, okay? Of that one person, okay, you say, is it 1% of your net worth? Okay. Now you're going to find it's 10% of that. Okay. So the penetration among the people that have the wealth, high net worth individuals, right, is virtually nil in the United States. There's a lot of people, right, who, have a PayPal account or a Venmo account and they've got $10,000 of Bitcoin and a net worth of 10 million bucks. I'm talking about is it an investment position as opposed to dabbling as if you were going to Vegas? So it's just not owned by high net worth investors, right, age 50 to 75. And we like to talk about the institutions that own it because it's encouraging, but it's basically not owned institutionally. We mentioned Saylor, and he had a very good point. So, we started buying it last year, as you point out, right around 15,000. Since then, right, there really have only been 2 major, at least known buyers, right? Saylor bought over 100,000 coins, right? And Elon Musk bought half that much, probably a little more when you factor in what he bought personally and for SpaceX. Square bought 100 million, Marathon bought 100 million, but really 2 buyers took us from 15,000 to 66,000. What happens when the large sovereign wealth funds start coming in and the insurance companies in size and the macro hedge funds? Again, think about gold, right? Gold is going nowhere. We've got inflation, we got monetary, if you're a macro guy, you got to sell your gold and buy Bitcoin. So what happens if 10% of the gold in the world is liquidated and goes into Bitcoin? That's $1 trillion that would come into Bitcoin. That would take Bitcoin up 4x based on the flow.
Right. And so I just you mentioned corporations and their approach to Bitcoin. Tim Cook made some news this week. He was talking to Andrew Ross Sorkin at the New York Times Dealbook Forum, a virtual conference that Andrew hosted. And he made waves by saying that he personally owns Bitcoin, that he has studied it, that Apple has studied it, but they have no immediate plans, I believe were his words, to incorporate it into Apple Pay or to buy any on their balance sheet. What did you make of his comments overall?
Look, I think the big takeaway is you have another super smart successful guy. What he said is that he studied it there and that there is a place for Bitcoin in a diversified portfolio, right? That's what he said. And I agree with that. And so, if you think about it, you can you can line up with Stan Druckenmiller, Paul Tudor Jones, Ray Dalio, Dan Loeb, Tim Cook. I mean, I can go on. Or you can line up with Peter Schiff and Nero Rubini. I mean, as Anthony actually said to me this morning, he doesn't know anyone who has studied Bitcoin who hasn't come away and been like, this is something I got to own. So, I think all this stuff, adds up on top of it. You got the ETF, you have Tim Cook saying he owns it. It takes everyone a little bit of a different thing to trigger them to actually buy it, the adoption. And so I thought it was great. He's another billionaire, right, saying that Bitcoin is in his portfolio.
Yep. We have a question in the chat. We're not big on sort of price predictions and things like that. We let other pundits weigh in there, but based on what you've observed with market sentiment, market dynamics, the scarcity that's developed in, the on-exchange supply of Bitcoin, when do you expect us to hit the psychological $100,000 barrier?
I think we'll get there by the end of the first quarter. I mean, that's a 50% move. I mean, it's a real move, but it's not, that's what happens, right? As we move up, we start clocking these landmarks faster, right? So, once we get to 100, right, getting from 100 to 200 is only, 100% move, right? Is what we've had this year.
Right.
And again, I think the thing you got to remember is is it a tulip? Is it a bubble? As I'm too late? Am I too late? As it gets bigger, people have to buy it, right? It gets to be the point where you have to have an allocation. It actually has, again, almost a counterintuitive approach, which is, it's not like I missed it. It's like, oh my God, this thing's worth a couple $1 trillion and we don't own any. We're underperforming, right? I run the Princeton pension fund. I have no Bitcoin. I'm getting my ass kicked by Harvard and Princeton who have allocations. We got to make an allocation right now. The Penn, University of Pennsylvania's endowment is now getting their ass kicked by Brown, Harvard, and Princeton. You just have this effect, and it just draws in these pools of capital.
Yeah. And just a note, a couple people in the chat asked for the link to Galaxy Digital's Ready Layer 1 research piece that I referenced earlier. If you go on Anthony's, I posted it in the chat for everybody to see. You can also go on Anthony's Twitter profile. He retweeted it earlier today. So would definitely recommend that everyone reads that. We have a question from Hussein in the chat who's asking, there seems to be a feeling amongst certain Bitcoin pundits, you could say, or people that do research in the space that think that we could get a 6-month really strong run of price before eventually we see some type of pullback. Are you observing or reading similar types of reports? And do you think there's any merit to that?
I do see the similar reports. My answer would be I have no idea, but I'll criticize the thinking that is driving that sentiment. I think that, there's this halving process, and I think people are looking at the prior Bitcoin cycles and assuming that they're going to continue. But the thing about the halving process, right, which is, right, today there are 900 Bitcoin that are mined daily. If you go back before May of 2020, it was 1,800. Or if you go 4 years back, it was 3,600, right? If you go 4 years back, it was 7,200. As you move forward, it's just a matter of math. The impact, right, as a percentage of the total becomes less and less, right? So there's a certain point where these halvings don't matter. And I'm in the camp that they don't matter anymore, that the demand side is far more important than the supply side. Now, look, we started off by talking about sentiment, right? So if everybody's looking for this to happen, it may become a self-fulfilling prophecy if everybody decides to lighten up in and around the same time. But, my experience is that markets operate to try to make the maximum number of people look stupid. Right now, Bitcoin going up makes the maximum number of people look stupid. I think if everybody starts playing that cycle, I think they're just going to be wrong.
Right. I recorded a SALT talk earlier this week that's published on the SALT YouTube channel that I would recommend everybody listen to. But it was with a young man named Joshua Frank. He runs a company called The Tie, which provides sentiment analysis and really sort of a Bloomberg terminal for crypto traders. And he made a comment to me. You know, he didn't reveal a lot of the firms that he was mentioning out of respect for his clients, but he said you'd be shocked to look at his client list of hedge funds that in the last 6 months or so have bought access to that terminal to start researching sentiment and start trading Bitcoin. Do you think it's something that more and more hedge funds are not just, and investment institutions in general, are not just going to be looking for exposure, you know, passive exposure to the space, but you think liquidity and volatility might fall as more investors start trading the asset more actively?
I don't know if it'll result in a decline in volatility, but the first trade, at least institutionally, that people make is they play the futures role, where they buy spot and sell futures. And there's been historically a nice return that you can make on that. And that tends to be the first trade. And then there are other sort of market neutral, vol trades. And then, people ultimately learn more, and then they get more comfortable, and they I think really want to get exposure. So I think you're going to see. It's going to really depend upon like what your fund is, what you promise investors, and how this can fit into what you're doing. Right.
You talked about FOMO for retail and even institutional investors. There's also a FOMO that's playing out on a city by city level in the United States and likely internationally as well. Now, you had El Salvador, the president came out. They made Bitcoin legal tender in the country. They bought a lot of Bitcoin at the national level, and that trade or that investment, whatever you want to call it, has played out very nicely for them. You had Miami really plant its flag in the ground first as saying, we're going to be the crypto capital of the United States and the crypto capital of the world. You now have a new mayor in New York City who's saying that we should be teaching crypto in schools and that he's going to be a very pro-Bitcoin mayor. He's going to take his first 3 paychecks in Bitcoin. How much of that sort of one-upping do you expect on an international level? You see places like Brazil and others talking about making Bitcoin legal tender and following the playbook that El Salvador made. And what impact do you think all that one-uppance is going to have?
Look, I think it just keeps creating a network effect, right? Where more and more people are pulled into this. Like, Coinbase in their earnings yesterday, they've doubled their staff in the last year. They're up to like 2,700 employees. So let's say they hired, 1,300 people. All those 1,300 people have friends, family, cousins, neighbors, right? And so now all those people know someone who works at Coinbase. They're more likely to work in Bitcoin, right? Someone in New York who not sure about Bitcoin, they hear Eric Adams is getting paid in Bitcoin. They're more likely, there's a lot of, it's creating great jobs. I guess the other thing to mention, which is related, John, is the amount of venture capital coming to the crypto space is just staggering, right? So this is economic activity, this is jobs, and this is resilience. It gives the industry resilience, right, for economic cycles, for market cycles. So, I think it's going to just keep, continuing. And I give, Eric Adams a lot of credit. A lot of the traditional finance people, I think are going to be obsoleted if they don't adjust to this soon.
Right. And, we like Citadel and Ken Griffin, but somebody made a comment in the chat that he was on with Andrew Ross Sorkin this week, who asked almost every one of his guests about their view on crypto and Bitcoin. And Ken Griffin is one that has not seen the light yet. So it'll be interesting if he's another domino that falls in sort of the titans, the hedge fund titans, as they look at Bitcoin. You talked about hash rate earlier, and there was a lot of doomsday, prognostications when China made Bitcoin illegal and basically really cracked down on Bitcoin mining and shut, the hash rate was down. I don't know the exact numbers, but more than half, I believe. We're now making not only all-time highs in price, but all-time highs in hash rate. The transition of hash rate to the United States and other places. We were talking earlier this week about our friends in the UAE. We have our conference, the SALT conference in Abu Dhabi. We have some clients and partners there in Abu Dhabi. We're very fond of the country and of the city. And they just invested nearly $1 billion in total investment in or placed orders for nearly $1 billion in equipment for Bitcoin mining rigs, and are going to be tapping into sort of excess energy that they have. How important is that further decentralization of the hash rate for the long-term health of Bitcoin?
Oh, I think it's the biggest development of the year. Prior to the China ban, you had over 50% of mining in China. And, there was a risk, real or perceived, we now don't have to decide if it's real or perceived, that China could, for example, simultaneously take control of all of the Bitcoin mining in China, right, and mess with the protocol, right? That risk is gone. Okay, I mean, I think the two biggest risks to Bitcoin coming into this year were China and regulatory risk, right? The China risk is completely gone, okay? And with the Bitcoin ETF, you had, in addition to Gensler, you had Jerome Powell quote, Bitcoin, no one's gonna ban Bitcoin, right? He had said at some point this year. There's going to be regulations. We're talking about regulating stablecoins. We've talked about, that some of the cryptocurrencies might be securities. There may be enforcement actions, but the regulatory risk is down substantially. And I think anyway. Back to your question. The China ban was the most significant event again of the year. The other thing, which Saylor and I talked about last week, is you now have Bitcoin miners. Instead of mining Bitcoin, selling the Bitcoin, right? What they're doing is they're selling equity and debt. They mine the Bitcoin and they hold the Bitcoin, right? So if you think about miner selling, right, as being a water tap, and we have this halving cycle, and every 4 years that tap gets turned down a little bit, right? It gets cut in half. But we now have a constructive halving going on, right? As the miners are migrating. We had 2 go public last month. We have 1 coming public in a month. And every time they come public and they become hodlers because they now have access to our capital markets, that supply gets turned, not off, but it gets turned down. And that again, I think is going to contribute to these upward moves.
We talked earlier, I asked earlier, what things could turn sentiment again negative and start creating that downward volatility that has a cascading effect. The item that Elon Musk cited, which is how green is Bitcoin? Is it harmful to the environment? We just had the COP26 summit in Glasgow where people are talking about ways to cut emissions and focused on climate change. How much progress is being made on that front? We could talk about, is hash rate migrating out of China? Is that having a positive effect on the greening of Bitcoin? But where are we in terms of assuaging concerns from government and other officials about Bitcoin's impact on the environment?
Before I answer that, I have one of those block clocks in my office, and I just saw, we hit 69,000 today, and Bitcoin is now 62,899 on my clock, which I'm assuming is accurate. You asked what could change sentiment. That changes sentiment. Oh my God, you know what I mean? It can move quite violently, and sentiment can turn because of that volatility. Look, the ESG issue again ties back to the China issue. All of the North American miners are absolutely committed, right, to renewable energy. And why are they? Because the institutional investment community is. So if you want to finance yourself with cheap debt and equity, right, you've got to be ESG friendly. So what you're seeing is as this hash power or more computing comes online, it's all either wind or solar, hydro, and where it's natural gas, you're seeing miners buy carbon credits to offset it, as we do. So, we own Bitcoin in our funds. We've purchased carbon offsets related to, down in Brazil, sort of stopping some deforestation. So I think again, the China thing helped on that. The other point I would make is the technology advancement in mining rigs, okay, is happening at such an incredible pace that you can mine with less energy, right? They're getting more, so that and I don't understand this stuff, but the chips, have become so sophisticated that they don't require as much energy. So you have technological advances on the one side and the mining, combined with renewables. It's not gonna be, green overnight, but it's moving quickly in that direction. And generally direction is more than important than destination in in these kind of things.
All right, well, we're going to leave it there. It's been great to be back with you guys on the SkyBridge Bitcoin Review. A reminder, if you have any questions that we didn't answer during today's session, please email us at bitcoinir@skybridge.com. If you haven't been paying attention to what we've been working on, I have limits to what I can say here, but we have a lot of different opportunities for people to learn about and potentially get involved in the crypto digital asset space, depending on your personal situation. So just email us bitcoinir@skybridge.com. At the very least, we can provide you educational materials so you can continue to learn about the space. And thank you, everybody, for joining us. Thank you, Brett. It's great to be back, and we'll see you guys back here again next week at the same time.